From our 22 News Broadcast Center, this is 22 News in Focus.
And welcome to 22 News in Focus. I'm Nick Oresco. The U.S. economy is still recovering from the impact of the COVID-19 pandemic. With a presidential election looming, what can we expect to see in 2024? And if you're struggling financially, what are some ways to get ahead? Today on 22 News in Focus, we'll be taking a look at the world and U.S. economy with a financial advisor, and then talking with a credit counselor on how to get your personal finances in order. Joining me right now is Mark Teed, Senior Vice President of Investments with Raymond James. We're into the fourth quarter of 2023. Let's take a look back. What did analysts predict for the country's economy this year, Mark, and what actually happened?
Well, you know, Nick, we have to go back a little bit. At the beginning of last year, we were ending 2022, which turned out to be one of the worst years in history from both the stock and the bond market. It was the worst year in the history of the country for bonds, and stocks weren't that much better. With that in mind, we started 2023. I think most people have what's called a recency bias. They said, 2023 is going to be just like 2022. So it turned out to be exactly the opposite. We were expected to have a tough economy. There were expected to be lots of layoffs. The Fed was really trying to engineer that. So as we look back now in almost December, it looks like we're going to be okay.
For the past year or so, especially last year, we were talking a lot about recession. We used that word a lot. The economy, as you mentioned, is looking pretty good. And I remember you saying last year when you were on the program that we were already in a recession.
Yes.
Is that still true to today?
No, we escaped. We did not have a recession last year. Technically, we did, but we really didn't, according to the economists. We were expected to have one the second and third quarter of this year, but thank goodness for Taylor Swift, Beyonce, and the Barbie movie. It kept us out of a recession in the summertime. So we really haven't had one yet. There's now a fear that we're going to have one in early 2024, but I'm very impressed with the consumer in America. I think we might actually avoid a recession.
What are some of these strong and growing industries and sectors that are helping the economy right now? Of course, you mentioned Taylor Swift and Beyonce and all that. Jokingly, I'm sure, but I'm sure they did help.
They did.
What else helped?
I think what else helped this year was the fact that inflation didn't turn out to be quite as bad as we thought, and it dropped off pretty quickly as we got into the summer, which is what really the Fed was hoping to do. Because if you're going back to what was happening at the end of last year, if you went to the movies, what was showing at the movies was a nightmare called inflation. And that's what shocked the markets. Nobody really thought that was going to be as big as it was. But then when it dropped off as quickly as it did, I think the economy is recovering nicely because oil prices didn't go to 150, people didn't get laid off, food prices came down a little bit, so things got back in line.
Also, of course, very good news. As we enter the fourth quarter now that's about underway, what's the outlook for the stock and bond markets?
Coming into 24, we're optimistic. We're optimistic again. We don't think we're going to have a deep recession if we do have a recession in the first couple quarters. It is an election year, so politicians will be throwing a lot of sugar on the market this year. So I'm thinking we're probably going to be okay. If inflation comes down as quickly as we think it might, we could see rate cuts by the middle of the year, which could help housing prices, and we could see a pretty good year next year.
What sectors are most attractive? Some analysts expect the bull market to resume in 2024.
I think healthcare looks really attractive. I think the industrials, which are the big manufacturing companies, look very attractive. Energy companies look good. We're going to be dealing with the old energy of oil and gas, and we're going to be dealing with the new clean energy, and both are going to be simultaneous, and we're going to be building. So energy stocks look pretty good, and I think technology stocks look great.
Well, you got all that AI stuff, right? That's another story, though.
That's another story.
Also, a lot of stories that are making headlines this past year are the wars in not only in Ukraine, but the most recent one in Gaza, Israel, and Hamas. How much impact have those wars had on our economy here locally?
Not much. There was fear that the two wars combined were really going to drag the economy down, but we really haven't seen it. They're really, Ukraine, you don't hear much about it anymore, and now that Israel and Hamas is starting to get settled, you don't hear much about that as well, except for the hostage situation. So I think it really didn't make as much impact as people thought. Defense stocks are doing pretty well because of it, but generally it hasn't really affected the overall economy too much.
And that goes for globally too?
Globally as well.
Okay. What about, last year at this time, there was a lot of concern about oil prices and shipping as well. What is the outlook for gas and oil this year?
I probably would have lost this bet, Nick, because I would have bet that oil prices would be much higher. You know, with inflationary pressures, a global economy that was overheating. But in fact, oil prices have really backed off quite dramatically in spite of all the problems in the Middle East. So that's really been the big pleasant surprise this year, is at the end of the year, we're going to have oil prices down to where we can buy gas at a reasonable price again.
Which that connects to gas prices as well. I mean, right now at this time, prices are substantially down from where they were a couple months ago.
Most definitely. Most definitely. And that's, I think, probably the biggest surprise, because there were people that were expecting a $100 barrel of oil. Right now it's in the 70s, or even $150 a barrel, and that hasn't materialized. So that's been good for the consumer. So that's helped keep prices down a little, because remember, everything is shipped. It takes oil and gasoline to move product around the world, and that's good news for the consumer.
Fed Chair Jerome Powell said he's unsure they've raised interest rates enough to slow down inflation. Higher rates mean, of course, higher borrowing costs as well. Do you think it would be a good move to increase interest rates at this point? You said they are coming down slightly, but what is the outlook on that? Would it be good to increase them more?
Well, you know, Jay Powell has a tough position. It's game theory. He knows what we know about the economy, and we know what he knows about the economy. So it's a bit of a bluffing game right now. I think what he's trying to do is jawbone the economy into slowing down naturally by making believe he's going to keep interest rates too much higher than he's normally would. But I just don't think he can do that. So I think he's going to have to give in and probably cut rates next year, even though he's still talking tough like John Wayne.
Of course, holiday shopping has begun. We just had Thanksgiving. Christmas not too far away. Interest rate wise, you said they are coming down. Do you think with the prices coming down on most goods, is that going to attract more shoppers and consumers for buying things up?
Well, that's a tough question. We had a couple days already. We had just had Cyber Monday, and it was pretty good. So we've had Black Friday, Cyber Monday were both excellent. I think the consumer is ready to spend. Even though it doesn't look like they have it on paper, I think they'll find a resource to get enough money to have a great Christmas.
Did you think that word, or do you think that word recession that we were using a lot last year affected a lot of people wanting to go out and spend?
I do. Yes, I do. I think people decided that they didn't want to go into a recession. We came out of COVID being locked down for 3 years, and I think people said, no, I'm going on my trip. I'm going to go see Taylor Swift and pay $800 for a ticket, and I'm not going to go into a recession. Because I think people just said, no, recession sounds too negative. And they felt if we went into a recession, we wouldn't be able to do anything. So I think they single-handedly kept us out of this. All
right, Mark, great insight there. We will continue our conversation when we come back. You're watching 22 News in Focus. We're back now with 22 News in Focus. We're talking with Mark Teed, Senior Vice President of Investments with Raymond James, about the international and United States economies. Housing is one of the biggest sectors impacted by an increase in interest rates. Right now, housing stock is low and prices are high. There's a housing crisis nationwide, and in Massachusetts, it has become critical, with thousands of families across the state living in either hotels or other alternative housing. Mark, what is the housing market look like for 2024?
Demand is going to outstrip supply again for about the 15th year in a row. You know, Nick, we did this to ourselves back right after we came back from World War II, when people started to have babies, which created the baby boomer generation. We just didn't have enough houses. And so for 25 years, the price of housing just kept going up as we kept trying to chase the number. There was more demand than there was supply. Very similar to today, where we have 77 million millennials, and only half of them even own their own homes yet. So it's the same thing. We just don't have enough supply to handle the baby boomers who are still living and the millennials that want to own their own home. So I could almost see prices going higher for many more years, because the anomaly here is interest rates went up to historic levels as fast as we've ever seen in the history of the country, and the price of real estate continued to go up. That never happens. Bankers will tell you that never happens. So this is very interesting. So we could see, as long as demand is outstripping the supply, we could see people bidding houses up for a very long time.
It's a very tough market. Do you think, or do you expect the construction sector to increase home building in the next year?
I would say yes, but it's just so expensive to get compliance and get a lot and pay for. So starter homes become very expensive. So I think we almost have to figure out a way to get the baby boomers to move out of their houses into another house so that the starter homes can be sold to new people.
Which means my parents.
Which means your parents.
Need to get out and give me the house.
Give them a good talking to, Nick.
The job market seems to be in influx, lots of concern of different positions, but people are still out of work or underemployed.
Yes.
What is the outlook for the job market for 2024, and which sectors seem to be seeing some growth?
Another good question. Well, demand, again, is higher than supply. Even though there's a lot of people that are still out of work, there's a lot more jobs that are still being posted. So the demand for new workers, and we haven't even started the artificial intelligence age yet, which is going to demand a whole lot of skilled workers. So I think the problem continues. Again, if you're working, I think it's a good position to be in because I think you're going to be able to demand higher income and better benefits.
The end of the holiday shopping and vacation year has historically been a boost to the end of the quarter bottom line for, of course, many businesses across the nation. Do you expect that businesses will see an increase in revenues over the next few weeks, obviously with holiday shopping, Christmas time, and holidays just around the corner?
I do. I think the expectation is that it's going to be a soft year, only up maybe 3% instead of the normal 7 or 8%. But I have faith in the consumer. They will look at their finances, they will look at their children and say, you know what, I'm going to buy because little Johnny needs it. So I do think things will be okay. I do think people usually rise to the occasion. The back to school sales were a little bit weak, but I do expect holiday season this year to be good.
Why do you think, or why were those school sales down?
I think people were just being cautious. That was about the time everybody was yelling recession. Now, recession to me almost sounds like, to the average consumer, I know what it means, but to the average consumer, it sounds like something worse than death almost. But it's not. And so I think people just naturally, when they hear that word, they pull back. We need to say the economy's growing. As a matter of fact, Jay Powell is raising rates to keep the economy from going too fast. He's trying to slow it down. So this is the opposite of recession. But when he's doing that, he could force us into a recession. That's the worry.
Is this something that needs to happen? Is it almost like a cycle for the economy to get back on track?
Yes. Inflation is bad. We need to get inflation out of the system. So the only way the Fed knows how to do it is continue to raise rates until somebody feels the pain or until something breaks. And unfortunately, usually it's the credit system or the mortgage market or whatever that breaks.
All right, so let's talk about individual finances now. What are you advising your clients about their investments and retirement plans?
I'm talking to people a little bit about having faith. We went through 2022, which was a horrible year, like I said, and people were really dismayed about the American economy, the system. I asked people to give it a grade of what they thought the economy was like. Most of it was C-, D-. But then the market came back. Against all odds, the market actually recovered, and it looks like we're going to end up probably up about 20% this year. I tell people to have a little faith in the American economy. I mean, we are Americans. We're fantastic at doing this, pulling the rabbit out of the hat at the last minute. So you just got to stay the course. You really got to look at yourself and say, okay, I know my personality. I've just got to stick with the plan and not jump every time it looks like it's dangerous.
But sometimes asking for faith is also difficult.
It is. Faith is tough. Faith is tough because really the markets look out a year and say, this is what's going to happen. A lot of people just can't come to grips with that, and they don't believe that it's going to do as well as the markets. And look what happened now. Last year it looked horrible. This year, things look pretty bright. And if I were Joe Biden, I would be shouting from the mountaintops is what's going on with the economy.
Let people know.
Let people know.
How often should people review their strategic asset allocations?
Quarterly. At least quarterly. At least take a look, make sure you're on track, make sure nothing's happened that scares you. But for goodness sake, just because you look at it doesn't mean you have to take action. So look at it, file it away, and say, Mark said to stay the course.
What is tax loss harvesting and how can that help?
Okay, that's what a lot of people did last year. When the market went down, if you bought a stock at 30 and it's now trading at 25, you can sell that, take a loss on it, and use it against your taxes, up to $3,000 worth of losses. So a lot of people do that because it's the right thing to do. And right now, people should probably be looking at harvesting some bond losses. Take a bond loss and move it into another bond. That way, it allows you to take some write-offs against the government.
All right, so if you have a retirement plan through an employer, can you claim tax losses on your taxes?
You cannot. You cannot, because it's a tax-deferred account. It's an IRA. You can't take losses within a deferred account.
Tax season, of course, coming up relatively quickly.
It is.
Few months away. What are some ways to maximize retirement income?
Well, retirement income or retirement, assets. I would say if you haven't fully funded your 401k plan and you have a little extra money, I would ask your employer if you can fund that. Fund an HSA, a health savings account, at the end of the year, as much as you can, because you'll get write-offs for that, and it will help you down the road with your investments.
Should people consider buying bonds or investing in mutual funds, and which are better returns?
I think people should take a look at bonds now. When we talk about the bond market, with interest rates moving from 0% at the end of last year up to 5% this year, what that does is it makes bonds very attractive. So now you can earn roughly 5% on your money in bonds, whereas a year ago you couldn't. So I would say asset allocate a little bit. If you're 100% in stocks, maybe you take 10% of your investments in your 401k plan and move it to bonds. There's nothing wrong with that now.
The word retirement, of course, sounds all fun and games, especially if you have the money.
Yes.
A lot of people, maybe even in my generation, I'm not Gen Z, I'm millennial, but even us, millennials still struggle to save money.
Yes.
At what age do you ask people or do you let people know, okay, now is the time to really start saving for your retirement, even though it is decades away, you need that money?
Yeah. I think at 40 you need to start serious about saving for retirement. I know at 30 you're still thinking about it, you still want to buy a boat or go have fun or whatever, but I think at 40 it starts to become serious. At 50 it becomes a vocation, and at 60 you really need to start worrying about it. At 60 you need to start making some plans. But I do think if people don't have enough, they need to really continue working, because nobody's going to really take care of you, so it's up to you.
Earlier the better.
Earlier the better.
Did any investments see gains in 2023?
2023 was a good year for most things. Things like technology. There are some companies that created artificial intelligence chips that were up 200%. But generally, the technology stocks did really well because they did so lousy in 2022. Industrial companies did okay. Anything that was interest rate sensitive, like investment companies or banks or insurance companies, they had a tough year.
And what advice do you have for people who may be concerned about investment losses?
I'd say take them, but don't take them and then destroy your investment plan. Maybe tweak a little edges, harvest a loss like we just talked about, but don't let it change your whole plan. In other words, don't say sell everything and go to cash. Please don't ever do that.
Now, what about the people living paycheck to paycheck? Of course, unfortunately, nowadays we see that a lot more than we used to.
Definitely.
What do you suggest for them to start saving some money, especially for what we were talking about, retirement?
I think you just need to turn things around. Instead of paying your bills first, pay yourself first. In other words, take and make a commitment to your 401k plan, make a commitment to putting a little money away in some growth, but do that first, because if you wait until the end, there's not enough money.
All right, Mark, thank you. If you're looking for ways to pay off debt and improve your personal finances, we have a financial counselor with some ideas to help after the break. You're watching 22 News in Focus. It is hard to believe, but 2024 is a month away and people will begin thinking about New Year's resolutions. While the most popular resolutions are to get in shape or quit smoking, financial counselors want you to consider your financial health as well. Many Americans lack financial literacy, which is the ability to understand and use various financial skills, including personal financial management, budgeting, saving, and investing. And as a result, millions of people find themselves struggling with debt and unable to save, living paycheck to paycheck. Joining me now to discuss financial literacy and how to get out of debt is Gordon Oliver, Director of Business Development at Cambridge Credit Counseling. Thank you, Gordon, for being with us.
Nick, thanks for having me.
So if you can start by giving our viewers some background information on Cambridge Credit Counseling and what services you guys provide.
Yeah, Cambridge Credit Counseling has been in business since 1996. This November was our 27th year anniversary. And we're licensed and registered in all 50 states and the Virgin Islands, soon to be Puerto Rico. And the services we offer are basic services to help people that are having some issues with financial wellness. I think in the COVID time, mental health was a very, very big focus. Now that we've come out of the pandemic, the economy's opened up again, people are spending, financial wellness is now something that's become in everyone's best interest, and they know it because things cost more, everything's gone up in price. So the services that we have, number one, we have credit counseling, which is a free service where we basically do a budget analysis, which most consumers that we talk to, it's a great event for them to just take a look at income and expenses. And then we have a debt management program, which is where we work with all of the credit card companies to get benefits of reduced interest rates, lower payments, and we combine those payments into one monthly payment. So a customer pays us, we pay their accounts for them at a lower interest rate, getting them out of debt in the average of 44 to 48 months. We also have a housing counseling department that does first-time home buyer education, reverse mortgage counseling, foreclosure intervention. We do student loan counseling. We also do bankruptcy counseling. With Department of Justice, when you file for bankruptcy, you have to go through a Department of Justice approved credit counseling agency to do pre-filing counseling and then post-filing education counseling to make sure you're on the right path, to not have that happen again if possible.
Right, getting yourself in financial shape is probably one of the best New Year's resolutions people can take up. Have you seen an increase, you mentioned the pandemic, an increase in people since the pandemic began back in 2020?
We have. As a matter of fact, this past summer, there's some quiet times in our counseling days, and there's some very, very busy times. Usually after Labor Day, when everybody gets settled in school, the bills from summer start showing themselves. And January, late January, when holiday bills are being opened, those are also busy points. It was the first summer that we've seen in a really long time that our people reaching out for our help had risen.
And why do you think so early?
It's simply because when we came out of the pandemic and we got opened up back into the economy, slowly but surely, everything got worse. The cost of everything from gas to groceries. You hear people complaining about groceries all the time. I hear it in the grocery store where people are saying, I can't believe how little I get for $100 anymore. I used to walk out with 5 bags, I'm only walking out with 2. So the overall cost of everything has risen, and that doesn't always mean people are making more money to shoulder that.
Right, even though inflation is slowing slightly, like you said, the prices in stores are still very high for many people. What are some of the top financial issues that your counselors have been hearing from your clients?
I actually went in our department today just to have some basic dialogue, and the two major issues are not making enough money and the cost of everything has risen. That's really what everybody's hearing. When we do a counseling session, the very first thing we do is ask a consumer, like, so what's going on? How did you get in the situation that you're in? And then we hear that dialogue of how the customer, the family got into the situation they're in. And that's been the major issues that have been communicated that people are struggling with.
Living paycheck to paycheck,
Paycheck
of
to
course,
paycheck.
is a very high problem right now. What kind of advice do you give those people who do come in and say, I need help with my finances?
Budgeting, everything that we do is always going to be starting at the budget level, because we have to know, and the customer has to know, I bring in this much money and how much goes out of the money that I bring in and what does it go to. A lot of times people will do budgeting in their head. They know how much their paycheck's going to be, if it's bi-weekly, weekly, whatever that is, bi-monthly, and then they know what that paycheck's going to cover. But really documenting it and doing a little bit more studying on the spending really gets you down to be able to make some decisions on how you're going to manage that income.
Many people lack general financial literacy basics like making a budget, as you mentioned,
Yep.
savings, income versus expenses, balancing a checkbook account, et cetera, et cetera. Many people, especially my generation, don't know how or do not balance a checkbook at all. At what age should we start talking to kids about money management?
Well, actually, one of our board members, Jennifer Connolly, she's the president of Junior Achievement of Western Massachusetts. It's a national organization, but they're K through 12. So they're starting at kindergarten, trying to bring in some fun activities to kind of get into it. I think the thing you learn when you counsel people, the education and literacy is one part, but there's nothing really tangible in all of that until you start getting into the bill-paying world. That's when it all begins. You hear a lot of stories about people coming out of college now and moving back home because they never really had to deal with, I've got to pay rent, utilities, gas, I got to go to work, all the things that they have to start to pay for, including student loans, right? So people are moving back in because it's too expensive to live, and they have to learn that. Even if they had some skills, it's then the tangible part is where it all comes to fruition.
Right, it's one thing to hear about how much money you owe, but then you see it on a bill with your name on it.
And you're responsible.
And it's real life.
Right.
Do you think financial education should be taught in schools, and what would or should that look like?
I think that when you enter high school, I think there should be courses almost mandatory at least one of the semesters. Because very quickly, as kids get through that phase and they're getting ready for college, you hear a lot of parents saying, it happened really quick and I only have a little bit of time to now plan, and now we have to find out how much it's going to cost to go to college. And yet the students really not so engaged in that because they don't get it yet. So I think the more that we could do in almost a preparatory, you're starting to come into that young adult real life, that's when those conversations have to start. And when kids get their first job, all of those things should be taught in school. We know you got a job. Do you have a budget yet? No, let's do one. Let's use that as a class example of what you should be doing and how that operates.
Which would help them obviously in the long run, college, etc., adulthood.
Yep.
When a consumer comes to you for help, what are the first steps that you take?
Empathy is the number one skill the counselors must have, because the very first thing, if this is about financial wellness and helping fix some problems, empathy is the number one skill, and it has to come from the heart. Once you get trained, there's months of training to become a certified counselor, and then learning how to be open to listening to the client's situation without being judgmental, and then coming up with solutions no matter what they are. I mean, that's the number one skill of the job that a counselor will do for someone.
We talked about budgeting. What does a basic budget consist of?
So we've actually tried to change the term. Like spending plan is like, we want to call it that because budget seems to be that word that people don't really like. But really it is a measure of how much money is coming in and how much money is going out. And there are percentages that are recommended even in the bankruptcy counseling. Housing's 28% is the recommended amount of your income that you should be spending on housing. 20% on food and non-grocery, 12% on car and transportation. So if it can use percentages as a guideline, instead of going to the auto dealer when you're ready to buy a car and being like, man, that one in the showroom looks awesome. Let's take a look, can I make that work? And then you start adding things in and the payment's $500, $600, $700. So you have to look at what percentage of your income you can dedicate to a car payment. And that's a better way to do it rather than going in and finding the car you love and then figuring out how to pay for it.
All right, we go from cars to homes. Whether you're a first-time home buyer or are currently paying on a mortgage, there's help if you're struggling financially. We'll have that discussion when we come back. This is 22 News in Focus. We're back now with 22 News in Focus. One of the biggest investments people can make is purchasing a home. Cambridge Credit Counseling offers help for consumers who want to buy a home but may have a low credit score. Let's bring back in Gordon Oliver. What is your Mortgage Ready program?
Mortgage Ready program is actually one of the most exciting things that we've been able to work on with our counseling department in housing, simply because for many years, people were not eligible for a home for various reasons. Credit score, a lot of times, one of them, debt to income ratio, where they have too much debt. We have solutions for that. So all of that being said, the gap between loan officers and realtors and the client and a counseling agency or credit repair organization was always kind of fractured because there's no real communication. So the Mortgage Ready program, we partnered up with a fintech company called CredEvolve. And CredEvolve has software that basically has the Freddie Mac Home Coach underwriting guidelines built into it. A lot of consumers fail when they're trying to improve things because even mortgage loan officers and realtors, they'll say they try to help and whatnot, but they're commission based. So if it's not going to happen, it's, hey, try this and then see what happens. Not saying they have bad intentions. It's just there's no quick fixes. That's why the credit repair industry has been kind of under assault from the regulators, because a lot of the companies, there was just a $2.7 billion judgment handed down to one of the major credit repair organizations. They're promising false things, and they're not educating the consumer so that they can actually move forward and not move backward. And they use gimmickry to try and get things to happen, which means even if they get a low credit score consumer into a home and they push it through because they changed some credit problems, nothing's been done to change what got a person there, whether it's lack of education, mishap in life, made them go backwards, whatever that is. So the software is unique because the attorney, the loan officer, the real estate agent gets entered into the client's profile when they come for counseling. So as the client passes milestones, the communication goes to the loan officer, keeping them in the loop. Like if they're getting closer to getting underwritten, the loan officer can say, hey, I see you're doing great with Cambridge. Keep up the great work. We're getting there. More importantly, the software is intuitive enough to help the consumer when they have to do things like submit documents, store documents. If they actually have to challenge something that's on their credit report, the software helps them do that work. It's a lot of those little things. And no coaching. Everybody needs a coach. You see all the sports teams, they have quarterback coach, head coach, defensive coach, water coach. You know, they're going to coach for everything. When it comes to getting better, the key is getting this homeowner that's eventually going to be able to be underwritten actually educated so they know what it takes to be a homeowner and all the things involved as they are improving.
You mentioned a couple of things, Mortgage Ready program and Credit Evolve. How can somebody get involved, apply, and who is eligible for that?
Actually, very simple. Anytime anybody wants to inquire about any of our services, they can call 1-800-CAMBRIDGE, and then we figure out what they're calling for and what they're looking for. But a lot of those referrals come from a realtor trying to help a homeowner, and they're denied. They can't get the pre-approval, so they really can't start shopping for a home. So a lot of that comes via the realtor, the loan officer, or attorneys, you know, that have clients that have other needs than what they're helping them with. But they can either just call our company or they can, you know, they'll do it through the process. And we've made major partnerships with a lot of the mortgage lenders and realtors to do that.
Is there a cost?
There's a cost, and this is the other great part. The cost is $109 per month. When the client gets to the underwriting process, the mortgage companies are offering credits there to help supplement getting that money back at the time of closing.
Have you seen an interest in this program locally from prospective home buyers and mortgage lenders?
Locally and nationally. So Guaranteed Rate refers clients to us. Fairway Mortgage, Cross Country Mortgage locally, Academy and Agawam. They all understand the benefit of it. The fact that they're getting communication is the big thing, because if they just refer them and there's a disconnect, they don't know what's going on. But the fact that they actually know, did the client enroll? Where are they at? Have they done their homework? Are they making progress? Did they hit a milestone? All of that it almost adds the industry helping each other to get qualified, good consumers into the market.
Now, talking about home buyers now, do you offer home buyer courses, first-time home buyer courses, and what does that consist of?
We do. So the first-time home buyer course is exactly, if you just imagine what it would be, it's basically getting a first-time home buyer to understand. This is a lot of the problem when people get into mortgages. If they don't know what they're getting themselves into, and then you have to try and chase that backwards, it becomes a problem. So it is a full-blown education course on everything that's involved in being a homeowner, from taxes, insurance, even the programs that are available. They require certification that you've done first-time home buyer. So they have down payment assistance programs. For example, it's letting the customer know what they're eligible for with the different programs.
All right, we will have more on 22 News in Focus right after our break. Back here now on 22 News in Focus. Most people take about 25 to 30 years to pay off a mortgage. A lot can happen in that time that could impact a person's ability to pay, including a job loss, long-term illness, property damage, or other financial setbacks. If a person comes to you with concerns about foreclosure, what types of foreclosure intervention services do you offer?
Great question, and the first thing I want to say to this is there are myths or even behaviors where people don't want to communicate with their creditor. I can tell you, especially when the mortgage, the bank owns the home. If something's starting to happen, the first thing you should be doing is communicating and seeing if there's anything that's available to get some assistance. What we offer is, when people come to us and they're starting to fall behind or they're facing foreclosure, there's multiple options. There's loan modifications, repayment plan potential on the arrearage, forbearance to get a little bit of a vacation on making the payments, similar to what happened in COVID. Short sales are possible. deed in lieu, and then referral for legal services if we feel that the client just doesn't have a way to get out of the situation that they're in. And we don't give legal advice, but we know when a person's getting to a point where it's maybe time to talk to an attorney because they can overlook the situation and see what the options are. And when we counsel people, it's all about what are the options. And when you're facing losing that asset, we've got to kind of cover everything. And if it's not in our expertise, we'll be the first to refer it so that they can talk to somebody that has the legal set of advice to give.
There is also something called a reverse mortgage. And what are the pros and cons to this type of financial product?
So reverse mortgages, with the interest rates being higher, it's a little bit more challenging. But a reverse mortgage, it's called a home equity conversion loan. And basically that's where people that are 62 and older, that have a little bit left on their loan or own the house outright, it's a vehicle for them to take income out of to help supplement the cost of living.
Now, in Massachusetts, our state requires that consumers seeking a reverse mortgage attend counseling by an approved agency prior to obtaining a reverse mortgage. Do you offer this counseling, and what is involved in that?
We do, and how the process typically works is when you go to a mortgage lender, they have to give you a HUD list of approved counseling agencies that people can choose from. Since we're one of the largest in the country, we're usually top 3. They rotate them on purpose so people don't just keep picking the number one reverse mortgage counseling agency. And that's how people come to us, and we have to certify them. There's a lot of pros and cons of a reverse mortgage, and a lot of times, you know how families squabble about inheritance. A lot of times when we counsel consumers, the family may be involved in the counseling because they too want to know what are the pros and cons. So we go through that education with the consumer from, everything from impact on interest rates. So as for an example, this type of loan, when they take the money out of their home, the only time it gets paid is either when they're deceased, when they pass on, or when they leave the home, or if they're out of equity and they can't make payments. So we go through all of these pros and cons because the reason that HUD did this and the state of Massachusetts did this, when you're 62, if you make mistakes, you don't really have too much time to recover. So we're independent of the transaction. So all we're doing is educating and certifying that the customer understands exactly what they're getting themselves into, and we have to certify them with documentation that they have to bring to the mortgage lender to get funding.
I want to get back to the COVID-19 pandemic. You said that you did see an increase since 2020 for your services. Now, the pandemic caused financial problems for a lot of people. For those with large student loan payments, the U.S. Department of Education offered COVID-19 relief for some eligible student loans. That relief has ended, and the 0% interest rate ended September 1st of this year, and regular payments restarted back in October. Gordon, are you seeing a demand for help with student loans?
Oh, yes. 100% increase because of this very reason. If you just think about it in simplistic terms, for 3 years at 0% interest, people did not have to make a payment. And all of that being said, fast forward to October, that's the first time that people had to make payments because interest started accruing again on the loans. So we're in an economy that we're paying a lot more for everything, and now you have to infuse an average $350, $400 payment into your budget. Causes problems. More importantly, it's very confusing, the types of plans, what the best approach is. We make it simple. Our student loan counseling is free. Call a counselor, talk about the options. We go through them thoroughly and make it simple for them to understand what needs to be done.
All right, Gordon, thank you. When we come back, we'll have more on the student loan and student loan debts that many Americans continue to face. Back here now on 22 News in Focus, we've been talking about student loan forgiveness and, of course, all that debt that many Americans continue to face, especially after the COVID-19 pandemic. Bringing Gordon back in now. Gordon, who is eligible for student loan forgiveness?
Okay, so there's 2 types of forgiveness. We're going to talk first about public service loan forgiveness. And if I could just raise the flag, the alarm, whatever we're calling it, if you are a government worker, city, state, municipality, 501c3 nonprofit worker, there's a provision that's been put in place to help cure some problems with the program of people actually being eligible. So for public service loan forgiveness, you need 3 simple things. You need to work for an eligible employer, which I just listed. You need to have direct loans, which our counselors help people figure out relatively quickly. And then you need to make 120 payments on an eligible repayment program. And once you've hit that threshold, you get your loans forgiven tax-free, whatever the balance is. The problems with the program were people did not know they had to be direct loans. So they had older loans that didn't qualify or weren't eligible. They were on the wrong repayment program, so their payments weren't counting. And the employer, if the employer is solid, the provisions they put in place for the past 2 years, there was a waiver process that expired a year ago Halloween, but they carried the provisions through. And what those are is if you had the wrong loans, you can combine them into a direct consolidation loan. And if you were on the wrong repayment program, you can get credit retroactively even if they didn't qualify for the program. So we break this down for this public service employees very simply because it's confusing. Headlines about loan forgiveness are confusing. The Biden 20,000, 10,000 confused everybody because the Supreme Court shot it down. So then everybody said, oh, I can't get my loans forgiven now. The problem with those provisions is they expire on January 1st of this year. So anybody that doesn't start the process that could have gotten retroactive credit is going to miss the boat. And we've done everything in our power to try to communicate this out. Massachusetts Teachers Association member benefits, we've been partners with their organization to help teachers, educators, and still to this day, I'll talk to an educator that comes up to me and says, I'm not eligible, and I say, give me 10 minutes of your time. Lo and behold, they are. So for people listening, if they know a public servant that has federal student loans, certainly something to look into right now.
And you guys can, of course, help with those programs as well and give any information that's needed.
The counseling's free, and we simplify it for the client. Make it very easy what they have to do.
All right, Christmas is just about 5 weeks away, a little bit less. Holiday shopping is already in full swing. Come January, all those credit card bills will be, of course, rolling in, and many, I'm sure, don't want to see that bill coming into their mail. What are some ways people can reduce their post-holiday credit issues?
It's a great question. You want to know why? Guess how much we owe in credit card debt? 1.3 trillion.
A lot, yes.
And that's before we go into the holidays and people are going to spend. So, number one, Christmas clubs are a great way to start now for next year. A lot of advice that we give in an economy like this, in a time like this where everything costs so much, is if you don't have it, tell your family you don't have it. And it's hard for people because even when we get reports of the spending being down a certain year, we see the clients that it wasn't down for them individually, right? So you've got to have an idea with, this all goes back to the budgeting. In the budget, you have to be planning for this. Right? So how much are you going to spend? Make a list. It's kind of like going to the grocery store hungry. It's a very bad idea, right?
Yep.
Especially Costco when they have the little samples and whatnot.
Oh, that's great.
Right. So you got to make a plan. You have to have an amount you're going to spend total and then a list of the people and the amount you're going to spend on each of them to stay in control. Unfortunately, credit cards are like casino chips. When you go to the casino, if you have $500 bills, it feels very differently than when you have a purple or green or red chip. Same thing with credit cards. You know, you have to have a plan and you have to stick with it.
Once someone has organized their finances and is working to get out of that debt, what comes next? What are some good habits that people should get into?
January 1st is a great time to do what's called journalizing your expenses. And what journalizing is from January 1st to the end of the month, the very last date, every single dollar that was spent on something gets recorded, either by holding receipts, putting them into envelopes, and at the end of the month, having a cup of coffee and just jotting everything in. And then the budget that you have is a working budget. When you match the amount that you spent to the amount that you thought you were spending, it helps you make adjustments because we're in a data world. Artificial intelligence, we know that's probably going to go somewhere where there'll be some great tools for people to capture this. And there still were, but a lot of them, because they don't get funded, people don't have the opportunity to use the tools and download all of their information. So sometimes the old school pen and paper works as good as it can, and that should be done quarterly. January is good to do it just for habit and resolution, but that data might be a little bit higher than most months, so once a quarter is a good time to check out what you're spending.
Yeah, how important is it to keep up with these finances? Obviously, you don't want to lose track of what you spent, and then you don't have it, and then you fall in debt. I mean, how important is it?
It's as important as it gets, because investments, we talk about, a lot of times I'll speak to employers and employees about people can't put 3% away to match the company match because they have too many bills. But if we take a look at the budget and we can start cutting some things and find that 3%, people can actually start investing in the 401k and start drilling down debt at the same time.
How often should people review their bills? So you say in January 1st, you get a list of your budget. How many times or how often should you check that?
I think quarterly is really good because seasonally things happen, things change. I think I mentioned after Labor Day, people really reach out for help, and after Christmas vacation and New Year's, people really reach out. So those are two big targets. But once a quarter, you should be taking a look and stock what you've spent your money on, and that's you have to be able to control it. And sometimes you have to give some things up if you want to have a fruitful plan. Sometimes it's going to be, I have to say no to this, especially if it's a variable or an option.
Something that people should also maybe keep an eye on, credit scores. How often should people look at that?
Okay, so annualcreditreport.com is the website where you can get all 3 of your reports for free. So you can't get your credit score from that. You can pay for it. It's a couple dollars each report. So the first time you invest a couple dollars to get your credit score off the credit reports, a lot of the creditors now are offering it on their website through your platforms, even the ones you do banking with will offer the opportunity for you to do a credit check. But Experian, TransUnion, Equifax, you can enroll in some of their free services that gives you where you're at on a credit perspective. So as far as credit reports are concerned, we're in this electronic age where there's a lot of hacking going on and getting people's information. You hear breaches all the time. The first time you pull your credit reports, if you haven't done it, pull all 3 and review them, that all the information is accurate. And if it's not accurate, then there's a way to dispute it through the credit agencies. And then the second year, you pull 1 the first month, 1 the 4th month, 5th month, and 1 in the 3rd quarter, so that you're on a cycle watching at least 1 credit report to see if anything crazy has shown up.
All right, Gordon, a lot of information, but of course, a lot of great information
Yes.
as we head into a new year. We've been taking a look at the global and U.S. economy and discuss ways to improve your personal finances. Thank you to our guests for being on the program today, and to all our viewers watching. Thank you for watching. If you missed any of the program, you can find it on our website at wwlp.com. From all of us here at 22 News, enjoy your Sunday.